In the last Bank of England meeting, the pound sold off as two more hawkish monetary policy committee members, you can see here Jonathan Haskell and Haskell Mann, dropped from expecting and wanting rate hikes to moving into the rate unchanged category here. So this allowed the pound to sell off on an index level, and this week we have the Bank of England's meeting and we have GDP print coming the morning after. So what's very interesting here is you can see the risk event feature on Seasonax. Looking at GDP for the UK, over the last 5 years, there is a strong bias for the pound to gain out of the GDP print. Now, the UK is expected to come out of a technical recession on Friday's GDP print. But what will be interesting is if the Bank of England push back against dovish rate expectations, and if the UK GDP is higher than analysts are expecting, then the stage will be set for a nice push up higher in the pound dollar, particularly with the weaker non-farm payrolls last Friday, and that should allow lower interest rates from the US. So just notice over the last 5 years, 75% winning trade percentage. There is a median return of 0.23% and a maximum gain of 2.80%. So there can be some outsized moves from these GDP prints. It's certainly something to be looking out for. Trade risks, all outlooks have risks. Of course, this is no exception. The major trade risk here is that the Bank of England maybe signal a dovish outlook, and or the GDP print surprises to the downside, particularly if the UK was seen to be remaining in recessionary territory. That would certainly weigh on the pound. Remember, don't just trade it, Seasonax it, and sign up here at Seasonax for thousands of more seasonal insights that are just waiting to be revealed.